thank you for joining with me on the program today. As the Hang Seng Index has lost more than 20% in the first half, what do you think about the second half of this year?
I think the second half's going to be a little bit better. Obviously, it's a difficult thing to pick the exact bottom of the market, but I think the markets have fallen quite a lot already. I think the second half of the year is going to be slightly firmer in terms of economic data. Also, I think the valuations of equity markets are now rock bottom. They're showing a lot of a good long-term value. So I think that in the second half of the year, things should improve moderately.
Mm-hmm. And which type of market do you think will perform better, the stock, bond, or money market?
I think it's going to be mainly the equity market, most probably. Bonds have probably got a little bit further to fall. And I think that if we're right about the view that the economic background becomes a little bit better, then we'll see some return to activity in the equity markets.
Mm-hmm. Well, in terms of regions and country, which country or region do you think will be better performed than the others?
I think Asia is starting to look the best long-term value. We've seen the market fall substantially during the course of this year. We're about 2 standard deviations cheap, and the valuations are looking pretty good. If you look at what Asian markets have delivered in terms of earnings growth in the last few years, they've been in the double-digit territory, significantly higher than most other markets. And yet, where we are today, we're seeing, if you like, a PEG ratio, the PE to the prospective growth ratio, being the best internationally. So a number of around about 1 or just less is internationally quite attractive. So I think Asia in general, but in specific, I think China and India are offering really, really good long-term value. These markets have delivered very, very good earnings growth and are likely to do so consistently over the next few years. So from my perspective, from a very long-term view, I think India and China within Asia are looking pretty good.
Mm-hmm. I would like to focus in China because obviously the Chinese market has attracted a lot of investor attention. But unfortunately, in this year, we have a lot of catastrophe. We have the earthquake in Sichuan. We have the snowstorm in February. How about this disaster? Will they hurt the economy and the market?
I think obviously it's a terrible human tragedy, but realistically I think that the much of the impact of this has already been discounted in equity markets and bond markets. And if you look at ahead, I think that most probably the perverse implication of all this is actually quite good for equity markets. The reason for that is there's going to be a lot of rebuilding of infrastructure, and ultimately that will be quite beneficial to the Chinese economy.
And how about the Olympic Games? We are going to have the Olympic Games next month. It's going to have a lot of tourists and a lot of audience going to China. Will that boost the economy?
Not significantly, not for me. No, I think much of that is already in the prices of equity markets and financial markets in general, but also I think it's somewhat overdone. I think I wouldn't say that the impact of the Olympics is irrelevant, but its impact has been very much overstated by commentators and investors. I think most likely we will not see a significant impact either before or after. Really, the effect of the Olympics is quite small as a percentage of the overall economy, unlike the Olympics, say, in Greece, which was had a very big proportionate impact on the economy, and specifically being held in Athens, being a very important city. Beijing is not the most important city in China. There are many, many cities. So I think the impact are going to be relatively modest.
Mm-hmm. So finally, can you give some investment advice to our audience?
Yeah, I think obviously that the second half of this year and going into 2009 is very much dependent upon whether we see a return to moderate growth in the United States, whether we can avoid recession, and also, of course, whether or not we're going to see some inflation problem emerge as a result of high commodity prices. On balance, what we think is that we're going to see modest growth without there being a significant inflation problem. There's going to be some rate rises probably during the course of the end of this year and into next year. But overall, we think it will be an environment of moderate growth. And the implications of that are quite favourable to equities in general, considering where the valuations are today. So for us, looking on a longer term basis, equities should regain their composure, but I think for the time being things are going to remain pretty volatile.
Thank you very much for joining our program today.
Most welcome. Thank you.
Thank you.